Yeah, we live.
All right. Good evening, everybody. Happy New Year. Welcome to October. Welcome to November. Sorry, I think October was actually a good month for me. So that's how I was like, welcome to October. But yeah, please, welcome to November. I mean, I hope you all are doing all right. I hope your day went fine. And thank God the new month is starting with a weekend. It's like enough reason to relax, please. So I hope you've all been doing great from the beginning of the week. So today is day seven of our three value daily boot camp, and we've had a series of classes all through the past 8 days. And if you missed any session, please do well to check our YouTube channel and watch it. And if you're just joining us for the first time, this is Valucop Global. What we predominantly do is teach people how to get crypto jobs, how to get Web3 jobs, right? How to get skills that will make them employable. And yes, we do crypto trading by the side. So that's why we decided to teach people the basics of cryptocurrencies and crypto trading. So we've done justice to so many topics like introduction to cryptocurrencies, wallets and exchanges, crypto trading basics on decentralized and decentralized exchanges. And yeah, on Tuesday we spoke about airdrops. And today we have a Web2 community manager and a tutor on the hot seat. And Mr. Benjamin Odo, I hope I got the name correct actually. So he'll be taking us on crypto investing and portfolio management, right? Crypto investing and portfolio management. If you want to go into trading full time, you know that these are the two things you cannot escape it. If you leave it, you like you are literally gone. So in as much as there are risks in trading, today we'll be talking about diversification and asset allocation, long-term investing versus short-term investing, tax implications of cryptocurrency trading, dollar cost averaging strategy, and portfolio tracking and analysis. It may seem complex, but trust me, the person that is going to speak has done justice to it already. So I'm sure it's going to be something we easily understand. So this is 10 minutes past 8 West African time, Nigeria, and it is my pleasure to invite to the hot seat Mr. Benjamin Odor. My name is Halsey, and I'm going to be your host for tonight's session. Do sit well and enjoy the ride. Mr. Benjamin, welcome to Valucop. Welcome to a Free Value Daily. The floor is yours, sir.
Okay, thank you very much. Thank you very much for that. My name is Odo Benjamin. Odo, not Odo. Odo Benjamin Uchenna. You actually tried pronouncing it anyway. Um, I'm actually a Web3 community manager and a crypto tutor. I'm really not into titles, so I think that's basically about me. I'm a fresh graduate from the University of Nigeria and Soka. So I think that's a quick introduction about myself. So, Kelsey, I can go on right now, right? I can start.
Oh, yes, you can. And sorry about the way I pronounced the name. Odo. Yes,
Yeah,
please.
yeah, no
Yeah, yeah,
problem.
yeah, please. Yeah, you can start. So, before you go on, I want to say, on behalf of the Valucop team, before you go on, I want to say thank you for accepting our invite. We know the circumstances behind it and everything, but thank you. It means a lot to us. Thank you so much for coming on board. So you can start now, sir.
Sure, you're welcome. Um, just before I start, let me mute some of these apps. Don't worry, let's just go on. I don't think it's going to be a disturbance. So I already introduced myself. So um today we are looking at portfolio diversification. And when the Kelsey reached out to me with this topic, I was pretty much excited because this is one of the areas in the Web3 space, in the crypto space, that we don't get to talk about a lot. Now, a lot of persons are always talking about how to cash out. A lot of persons are talking about how to make money. Please, Kelsey, at any point you stop hearing me, please let me know so I don't end up talking to myself, please. Did you hear me?
Yeah, I can hear you. I can hear you.
Okay, beautiful, beautiful. So a lot of this is an area in the crypto space that a lot of people don't get to talk about. Everybody talking about how to cash out, how to make money. In fact, the current trend in the crypto space with the whole tapping is even making the pandemic worst. Everybody's talking about when is this project listing, when are we cashing out? But there is a trend that happens when people make money from this airdrop within the space of 2 weeks, 1 week, in fact few days. I can almost swear that no matter how huge the amount of money they have made is, they might have lost the money or might have spent it unnecessarily, probably have used it to buy scam projects. Now, there is a philosophy I've learned: money made without good financial knowledge is money soon lost. So if you're making money, you don't have plans, you're making money, you don't even know how to invest it, trust me, no matter how huge that money is, it is money soon lost. Now, and that is what brings us to our today's topic: portfolio diversification. Now, I want to explain these words individually, because when we speak this English, it makes it look so big, and someone who probably is new in the crypto space might not understand what portfolio is. Portfolio is simply what you have in your wallet. It is no big deal. It is simply your net worth. It is simply the $500 worth you have in your wallet, the 200, the 20, in fact the $10 that you have in your wallet is your portfolio. Now, the total amount of money, the money you have in your wallet, total amount of money you have is your portfolio. Now, what is diversification? It is not anything new. It is the same diversification putting something into different places. That is what it means. Now, in the case of cryptocurrency, portfolio diversification simply means it can be in three different forms. Yeah, it can be in three different forms. It could be investing your cryptocurrency in different investing your money, your asset, your portfolio in different crypto assets. Now, there are so many persons that um they end up investing all their money into one cryptocurrency. Say for example, you have much hope, you love a certain cryptocurrency so much that every single money in your portfolio you invest it into just one cryptocurrency. Now, while that might work out for you, there are higher chances that it might be a bad choice, because what happens if that one cryptocurrency eventually doesn't do well, something happens, something goes wrong on the way, you will get bankrupt. Why? Because you put all your eggs in one basket. So portfolio diversification is simply talking about not putting all your eggs in one basket. Now, when you have, say you have $500, you invest it into different crypto assets. Not like you have $50 and invest $1 into different crypto assets. That's not what I'm saying. That one will amount to not knowing what you are doing. But investing reasonably into different assets, not putting all your eggs in one basket. So it could come in form of investing in different reasonable crypto assets. It could also come in form of investing outside of crypto. Now, I have a few friends that they make money in the crypto space, they invest in the crypto space, but they still have physical businesses. So there are a lot of persons who are making huge amount of money in the crypto space, but they still have physical businesses. They have investment, they have real life investment that they invested their crypto money into. So for example, in the bear market, where the crypto market is going up and down, not moving very well, for some people who are some people are actually making money out of the market, obviously, and maybe the market is not moving fine for you. Your physical business can be something you can fall back to until when the business recovers. So that way you are diversifying your portfolio. You are not putting all your eggs in one basket. It could also be in it could also come in form of investing in different financial markets. We know that there are different financial markets like crypto, there is forex, there is stocks. So investing in different financial markets could also be a way of diversifying your portfolio. So I would always advise people. I think in the flyer that was sent to me, they said, and you get knowledge, then you earn money, or something like that. It's very important that in whatever you want to invest in, you get to learn about it first. If for example, as a crypto person, you want to also go into real estate as a way of diversifying your portfolio, it is very important that you learn about real estate. Don't assume that you already know it, or don't assume that real estate is just buying land and buying houses and selling them off. There are certain things you still need to know about these things, about maybe areas you should buy, the kind of lands you should buy, the seasons you should buy, because you can buy land during the dry season and then the rainy season it's a flooded area. So you need to calm down to learn. If you want to buy a cryptocurrency, you need to understand how to do your research. If you don't know how to do your research properly, then you get someone who can do the research properly for you. It is always very important that you gain this knowledge instead of having someone to do it for you. I personally am not a fan of investing in something I am not sure of, something I know I don't have a knowledge of. So it is very important that in whichever area you want to diversify, in whichever area you want to put in your funds, you need to make sure that you gain that knowledge. Do you want to start trading the financial market? Make sure you gain the knowledge. You want to invest in stocks, shares, make sure you get the knowledge. It is very, very important. Now, in this portfolio diversification, there are so many areas that come into play. Sometimes it could be long term investment or short term investment. Now, in diversifying your portfolio brings about investment here. So it's talking about investment. So you in this investment can be long term or short term. Now, there was a time I asked my followers on I think Facebook or LinkedIn. I asked them how long is long term and how short is short term. Now, in investment, any investment that is shorter than 1 year, any investment that is lower than 1 year is considered a short term investment. I know this might, for some of you, I think when I came into the crypto space, I was considering any investment that exceeds 1 week is short enough to be a short investment, and at least in a space of 1 week I should be making millions and trillions of naira or dollars, but that is not how it works. So a short term investment is an investment that is shorter than 1 year. Then a long term investment is an investment from 2 years and above. So it is very important that when you want to invest, you need to be sure of what you are investing into and how long does it take to yield profit. So that's why I said it is very important you learn. It is very important you learn. So if you're investing in the crypto market, you know that the crypto market is a very volatile market, and there is no guarantee that in 2 days time you're getting so amount of profit. In fact, anybody that comes to tell you that I'm a crypto trader and I make $30, and the person is putting it fixed that I make like $30,000 every day, it is not fixed. There are days you make more than that amount, there are days you make lesser than that amount. In fact, there are days you don't even make at all. So it is very, very, very important to note these things. So any investment that is less than 1 year can be considered as a short term investment, but any investment that is from 2 years and above, yes, I think you can consider that as a long term investment. Now, one of the questions that I know might be running through your mind now is, who should invest in long term? Who should invest in long term? Now, this is a very important question that I am sure that some of you might want to ask. Now, if you want to invest in a project, you want to invest in anything at all, there are chances that that investment might not yield reasonably on the short run. So whenever you are investing, you should have in mind that there are chances that this investment might run into a long term investment. You should have the mind of a long term investor in mind while investing in anything. You know why? Especially in the crypto space where nothing is certain. A project that you bought after 1 year might not even do well. And then maybe in the second year you start seeing moves, and maybe if you already sold it, you will miss out on it. So now, who should invest generally? In fact, who should invest on any long term or short term stuff? The first thing you need to note is that you should have a steady inflow of income. Now, what do I mean by a steady inflow of income? You cannot have 5,000 naira, and that 5,000 naira is what you're supposed to survive on, and then you end up investing it. Maybe after that 5,000 naira, you don't have a plan of where to get money next. You don't have any idea of where you should get money next, and then you decide to invest the rest of the 5,000 naira. The truth is that ulcer is real, and it might affect you. I don't know if you know that ulcer can kill people, but it does. So you need to note that for you to go into investment, you need to have a steady inflow of income. And that is why I advise most people who want to go into maybe trading or maybe investing I always advise them to go into Web3 jobs. Web3 jobs, you can be able to get jobs in the Web3 space that will pay you monthly. Now, even if your investment is not going well, you have a salary to depend on. Or most times, I can some people actually get physical jobs, but the truth is that those physical jobs might not be as flexible as you want. But if you find a flexible physical job, as long as it's paying you well, it is still a good one, so that you don't end up selling your investment when they are ready. I think I will even share a few of my stories before the end of this class. So you don't share you don't sell your investment when it is going down. Okay, so it is very important that you are sure you have a steady inflow of income. Now the second one is someone that is emotionally ready, someone that is emotionally ready for the long term. Now why I added that emotionally ready is because in the crypto market does not just go up. Now I'm using the crypto market mostly because we are talking about the Web3 space and crypto and blockchain. So if you want to invest in the crypto market, if you have looked at the chart, basically everything that happens in the chart, every financial market chart, everything that happens there is basically supply and demand, buying and selling. That is basically what happens there. And you will never see the chart go up just once you will not. There are times when you see one candle go up once, but you still see that consolidation, you still see the market come down, go up, come down, go up. But there is never a time the market will just go up straight and just keep going up. No, the market goes up and comes down. So in that scenario of going up and coming down, you need to be emotionally ready. As a crypto investor, as a crypto trader, you will severally see your money go up and come down, go up and come down, go up and still come down to the point you probably bought it at, and still go up again. Now you need to be emotionally ready to accommodate these things if you want to invest, especially in markets that has to do with volatility. So you need to be emotionally ready for these things, and that is why it is important you have a steady inflow of income. So that when these things are happening, most times I treat any of my investment, I treat it like a lost money. I don't just take it because I know that looking at it make me want to sell it in the wrong time. So I consider it as a lost money, money that I don't even have again. So it is very important that you are emotionally ready before you decide to go into any form of investment, be it long term or short term. Now, in investment, I don't know if this is a conventional way of categorizing money, but this is one thing I have thought over the years. Each time I talk about investment, each time I teach people about investment, I always talk about two things. I always categorize money into two, and those two are investable and non-investable money. Now, having that mindset and knowing that there are money that you have that is uninvestable, there are money that are investable, money can be investable and non-investable. Now let me explain. Now, I as Benjamin now, I have 130,000 naira. My rent should expire in 1 month's time, and that 130,000 naira is my hope to pay my rent. Dat money, I have dat money, yes, but it is not an investable money. You know why? Dat money has been budgeted for something. Dat money has been budgeted for something dat can disturb my mental health, can disturb my can distort my standard of living if I tamper with it. Dat money is not investable. Now dis a lot of pipu online, a lot of motivational speakers online will tell you invest dat money you have, do dis, do dat, but the truth is dat is not a good financial you're not financially intelligent if you do that. You know why? If you are living outside on the streets, you might not have that comfort to think well. Imagine you are thinking of how to better your life and rain is beating you, or you are thinking of how to better your life and your landlord is coming to knock on your door because you are owing rent. It doesn't make any sense. Now if you have your space, you can think well. So if I for example invest that 130,000 naira now, maybe crypto, and then I'm expecting that in a period of 1 month I am going to get it back. It is possible that I might even get double or triple of it after that 1 month. But there are higher chances that I might even lose everything or half of it even before that 1 month. So what do I do? As a financially intelligent person who is looking at making an intelligent step as an investor, you don't invest such money. You don't invest such money. Because why? Nothing is 100% in the financial market. Nothing is 100% in the financial market. Crypto is a very volatile asset. In fact, all the financial markets are volatile assets. Is a volatile market. So you don't want to invest something that will cost you. Imagine investing my school fees, and then exam is in 1 week, and then the money in my portfolio from 130,000 naira I'm seeing 3,000 naira. How do you want to concentrate and read? you discover that it's going to affect your standard of living. So it is not an investable money. Maybe if you have money that you know that you have budgeted this money for something extremely important. In economics we different there is difference between want and need. Want is something you actually want it but you can do without it. If it is not available you can survive, but need is something that you know that it is extremely important. If you are saving money for a need, it is not intelligent for you to invest it, right? It is not intelligent for you to invest it. If you are saving money for a need, it is important that you keep that money and use it for that need. The reason is that if that need is not met at the time it is supposed to be met, something might get spoilt. Maybe your school fees, maybe your rent, maybe you're even saving money to go to the hospital. It is not right to invest that kind of money. I don't know other instances I can bring here, but I believe you already get the picture I'm trying to paint. So we can just move on. Now, what are investable money? Now, as a salary earner, or maybe someone who is building, or maybe you just have money in your account that you don't need at the moment. I don't think if there is anybody in Nigeria currently who have money they don't need. But remember I made mention of want and need. Now, you might need to pay your school fees but you want a week. Not because you don't have other weeks, but because you want a bone straight. I think that's the most conversant one we can remember. But you want a bone straight. Now that is a want, not a need. Dat kind of money can be invested. Money you are saving up for a want. Okay, say for example you want to, what example can I use now? You want to buy a trouser, you want to buy something that you know you don't actually need it, you can do without it, you can improvise, you can actually move on without having these things. You can invest that kind of money. Or you are a salary earner, you know that if you have money in your account that you don't have urgent need for, and you know that if you don't have urgent need for it and you are expecting money maybe as a salary earner, maybe in few weeks time or maybe in 1 month time, you know that even if you give out that money, even if you lost that money, let me just use that word, even if you lost that money, you can still live comfortably. Not comfortably per se, because investment sometimes might not comfort you, but it will not impact your standard of living so much. That kind of money is what we refer to as investable money. Can you help me up to this point, Kelsey? Can you hear me up to this point, please?
Yes, I can.
Okay. Okay, so let me just go ahead. So that is about investable and non-investable money. I thought I would have just freezed this app. So the next thing we will be talking about, because everything we are talking about is basically how to diversify your portfolio and maximize profit. Now, the next thing we are talking about is the tax implications of cryptocurrency, the tax implications on cryptocurrency trading. So now, um I don't think this is really applicable to Nigerians, but it's still a good thing we know about it. It's still a good thing we get to like talk about it so you know how these things happen. One of the tax implications on cryptocurrency traders is that it reduces the net profit of the trader. So say for example you are trading and you're making $100 and that $100 is being taxed. You know that the profit is going to definitely reduce. I know salary earners, I think they tax salary earners. So if you're earning like 30,000 naira and they remove your tax from the 30,000 naira, the remaining one is your money, something like that. So your net profit is going to reduce. The next one is high tax burden on cryptocurrency traders. I think in advanced countries like I don't know, I think UK, US, I think Japan, I think France too, they tax crypto traders, I think. So if for example now you have BTC in your wallet and you want to swap it to Ethereum, and you swap it to Ethereum, that is a taxable event. Or you have BTC, you want to convert it to a fiat, that's a taxable event. You have BTC, you want to send it out to another wallet, that's a taxable event. So you discover that every single small move you make is a taxable event, and you discover that at the end of the month you have high burden of tax to pay. Okay, you have high burden tax to pay because it is most of the activities you perform are considered taxable events. So I think countries that tax, I think UK, US, I think US tax, yes. I think Japan, I think France, I think what are these advanced countries? Some of these countries that tax traders, but Nigeria does not have. I don't think Nigeria does not have what is it called, a tasking system that incorporates crypto in it currently. I don't think, no, I've not seen. So currently I don't think Nigerians are being taxed for trading crypto. So that is one of the implication. Then the next one is complications for cross border, what is it called, cross border transactions. So say for example someone in the US wants to buy crypto from someone in the UK. Discover that different countries, they have different taxing regulations and stuffs, and country will tax this. So the taxing, the taxing burden will just be too high. It will just be too high for very 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 simple and little actions you take. So that's some of the implications that I just had to just mention one or two or three of them. So we just have to just be conversant with them. Now there's another important feature we also want to discuss, the dollar cost average. Now I want to discuss the dollar cost average. Now I'm going to um I'm going to use an example to explain this dollar, sorry, I'm calling it color. I don't know why I'm stuttering. I'm going to like use an example to explain the dollar cost average before I give it a definition. Now say for example now, let me use potato as an example. Something that is seasonal, potato is seasonal. So say for example potato newly started coming out and you want to buy a bag of potato, you want to buy a bag of potato, and then you have 50,000 naira, or let's just say you want to buy 50,000 naira worth of potato, but you don't want to buy it once. Now what do you want to buy a bag of a 50,000 naira worth of potato, sorry, and you share your 50,000 naira into 10,000 naira. Now if you share it into 10,000 naira, what will you have? You have 10,000 naira into 5. Now you know that for as the week progresses, because we are entering into the season of potato, as the week progresses potato is coming out more and the prices is reducing. Okay, now you divided your money into 5. Now for the first week, or for let's say for the first week, you went to the market with 10,000 naira, and maybe you bought 10 pieces of potato. Now progressing, you bought another one, you go again, you buy another 10,000 naira, you go again, you buy another 10,000 naira on, and that is how you keep buying until you exhaust the whole of 50,000 naira. That is how dollar cost average works. Now dollar cost average is simply an investment strategy where an investor wants to invest a specific amount of money but spreads it over time, invests it over time. Now let me use the crypto space as example. You want to buy a certain cryptocurrency, and let's say the current price of the cryptocurrency is like $10. All right. Now you okay, let's say the current price of the cryptocurrency is $10. Now the first, okay, let's say you want to spend $400 to buy a certain cryptocurrency, and the current price of that cryptocurrency is $10. Now what you did is you shared your money into $100 into 4 for 4 months. The first month you bought 10 of it, right? You bought 10 of it because one cost what? One cost $10. So $10 into 10 is 100. So you bought 10 of it. You bought 10 of it costing $100. The second month the price came down to what? $5. So you bought a certain amount. So what the dollar cost average simply does is that it allows you to invest your money over time so that you can be able to catch. Let's say for example, just like I mentioned earlier, the crypto market goes up and comes down, goes up and comes down. So in situations where you can be when it comes down, you can be able to buy more because there are times when you buy a cryptocurrency and then the price pumps so high and you discover that in your mind they are saying you would have bought more, you would have bought more, and then you sleep and wake up and discover that the price has gone below what you bought previously. Now the idea of dollar cost average is to be able to get is to be able to get dis cryptocurrencies at the best price possible, because the crypto market does not just go up immediately. It goes up and comes down, goes up and comes down, and it's possible that the point maybe you want to invest $400, the point where you bought it, it has not even finished dumping, and then after buying it today, the next day you come out and you are seeing it as $2. You will just be wishing you did not buy at that point. So the idea of dollar cost average is to help you to be able to make um is to help you to make good decision, what is it called, buy at good prices. So say for example now, let me finish up this example now. So say for example now you bought the first one at $10 each and you bought 100, you spent $100, and then that means if you spent $100, that means you bought 100 of that particular cryptocurrency. Then in the next month the price dropped to $5. Now the price dropped to $5, that means if you buy that particular cryptocurrency with that $100, you'll be getting what, 20 of that cryptocurrency instead of 10. Remember the first one I explained, I said the price was at $10. If you spend $100, you'll be buying 10 of it. But now the price has dropped to $5. Since the price has dropped to $5, if you spend that same $100, you'll be buying 20 of it. Do you get the I hope you guys are getting what I'm saying. You'll be getting 20 of it instead of the previous one you got 10 of it. Now for the next month, the price went up again to $8. Now for that month that the price went up to $8, you could only afford to get 12 of it. That is the number of the amount of cryptocurrency you were able to buy. You could buy 12 of it since the price has gone up to $8. Then on the fourth month, the price has gone up to $12, and now you're able to get just 8.33% of it. That was the total amount. That was what you were able to get. So at the end of the day, you discover that the total amount of the cryptocurrency you were able to buy was 50.83. You're able to buy 50.83. Okay, let's just say we bought Calci coin. Okay, we bought Calci coin, and the number of we spent $400, and the number of Calci coin we were able to buy was 50.83. Now for you to get the average price, all you have to do is, since you spent $400, add up all, it's just normal average, all of us know, just normal average you did in secondary school and primary school. Add the total amount you spent and the total amount of the Calci coin you bought, and divide the 400 by the total number of the Calci coin. Now you discover that the average you should be getting should be around 4 point something. So now you discover that 4 point something is lower than the highest price you bought it. The highest price you bought it was at $12, and the lowest price you bought it was at $5. 7 is very close to 5, and you discover that you were able to escape the highest price of 8 and 12. So if for example you share the average and say okay, you want to say everything I bought at $7, you see you're not even making loss. If you bought everything at $7, you're not making loss because the current price is at $12. So it will allow you to make informed decision about investment, and it can help you to checkmate your emotions, because when you see the market going up, going up, going up, going up, you already know you have some already in your bag, and when it's coming down, you know you still want to buy more. So it helps you to checkmate your emotions. It helps you to make what is it called, good investment decisions. So you don't just end up moving impulsively. The bull run is coming. When the bull run comes now, you see everybody that has been consistent in the crypto space, our DMs will be flooded. Which cryptocurrency should I buy now that will make me a landlord tomorrow? You'll be seeing funny questions. Because why? They are seeing the market moving, they don't even have the knowledge, and you see the person jump into the market, and then tomorrow you see the person dragging somebody online that the person is a scammer. Why? Person has refused to learn. So this dollar cost average is something that can actually help you, make informed decision. I have a friend that doesn't invest once in any asset. He doesn't invest once in any asset. Even if he wants to invest $100, he doesn't invest once. He can divide that his $100 into three, and then keep investing it small until he exhausts it. So I think I've made a lot of points. I don't know if you guys are taking notes, but I am pretty sure I've made a lot of points so far. So another thing I want us to look out for is, we have talked so much about investment, how to invest, how to make sure we diversify our portfolio, how to the best way to invest, which is dollar cost average. Probably not the best way for some people. The dollar cost average, there are sometimes that you invest and the market just keeps going up without coming down. Just like I mentioned earlier, there is nothing that is 100% in the crypto space. But what makes you a good investor in the crypto space is that your percentage profit should be higher than your percentage loss. That's what makes you a better trader or a better investor in the crypto space. So we've spoken about so many things. Now, how do we track our investment? There's something called portfolio tracking and analysis. Now, um there are so many softwares and so many apps you can use to track your portfolio. You can use to track your portfolio, and you know you can track your portfolio and get to know how your portfolio is. There is this what is it called, I think coin tracker. Coin tracker is an app that you can use to track your portfolio. I think the one I've used before is this Delta, Delta. Delta. It is also a portfolio tracking app. It helps What a portfolio tracking app helps you to do is that you can connect all your crypto exchanges to it. You can connect your wallets to it. Now, it will keep track of all the transactions you are making, your transactions, your sending, your withdrawal. It is keeping track of it. And I think for countries that pay tax, I think some portfolio tracking apps also keep tracks of taxes. I think, I'm not very sure. We are in Nigeria, so I don't really know how the whole taxing thing works. So I think some portfolio tracking this thing keeps record of your tasks as well. So it allows you to connect all the not some exchange, some of these portfolio trackers, they don't support all exchanges. They support some exchanges. So for the exchanges they support, you can connect it to this portfolio tracker, connect your wallet, the wallet you are using. I think they should be able to accept. I think they accept most Web3, most non-custodian wallets, the popular ones at least. I know MetaMask. I know Delta supports MetaMask, supports Trust Wallet. I know of those two. I'm very, very sure of those two. So they can, but one of the bad things about it is that some of them are paid. Like Delta. Delta is paid currently. I used to use it before, but I stopped. It's paid currently. I think, I don't know how much, but I know close to, is a reasonable amount of money anyway. But I know we have investors here that can be able to afford it. If you can afford it, is a good tool. So it helps you keep record of your withdrawal, your transactions, every single transaction you are making in all your apps. And I think it can also help you to know the net worth in all your wallets put together, and on all your exchanges. I think it's also one of the features it has. But currently, I've not been using any portfolio tracker. The tool I've been using is CoinGecko. The reason is that what I just need to be seeing is, I just need to be what CoinGecko does. I think the what is it, portfolio tracker also does it too. It sends you notification of the price actions on the cryptocurrencies you are holding. So what I do basically is, I know most of us should be conversant with CoinGecko or CoinMarketCap, but if you're not conversant with it, it's a very simple tool you can actually navigate. So what I do is, just if I buy a cryptocurrency, I simply go to CoinGecko or CoinMarketCap. As long as it is listed there, I add it to my favorite. So once any price movement, maybe I bought and then SOL moves up by 2%, I'll just receive the notification, SOL in your portfolio moved up by 2%. So I am tracking the movement of whatever cryptocurrency I have in my wallet, if it is going up or it is coming down. So once I buy, I go to CoinGecko or CoinMarketCap, add it to my favorite, and I'll be receiving what is called notification. So for me, I feel like that is enough tracking for me. So I didn't feel like it was necessary for me to pay for any what is it called, any portfolio tracking app or anything. I tried using I think I've tried using, what is it called, this coin tracker before, but I don't know, for some reason it was not opening, and I'm suspecting maybe it is not supported in Nigeria. I don't know if anybody has tried it before, but I've tried it before and it wasn't working. So maybe, I mean, there are so many times that being a Nigerian can be a limitation. So it's possible that it is not supported in Nigeria. It is still possible it is. I don't know what the problem could be, but I know that Delta works in Nigeria. Delta, yes, it works in Nigeria. And I think this coin starts, but I have not used it before. I have not used the coin stats before. I don't know. I think it should also be supported in Nigeria, but the one I'm sure of is this Delta. So the only tools I use most times are just that CoinGecko and that coin market cap, because I just get the notification immediately in my phone. So that's basically what I do to track my portfolio. So it is very, very important that when you're investing in the crypto space, you're investing in anything at all, you get to understand what it takes, get to understand what it means, and get to be updated about it. Imagine someone that invested in a Luna. And I don't know if any of you know about the Luna crash. I don't know if I'm talking to total newbies about the Luna crash. Someone invested in Luna and is not even just invested and just stayed there. You don't even know what's going on. You discover that when you come out, you discover that you lost everything. So it is very important that you keep track of your investment, you keep track of your portfolio, so you don't end up losing everything. Even if you are making losses, you can cut your losses depending on the fundamentals surrounding whatever is going on with whatever cryptocurrency it is. So it is very, very important. So I think our time is fast spent already. I think our time is fast spent already. So I want to also commend the Valucop team for using this app. I think this is my first time using this app, and it's beautiful knowing that it's a Web3 conference call app. It's beautiful, and I must commend you guys for that. So I think I'm done here. I hope I was not too fast, and I hope I was able to make some points. Over to you, Kelsey. Thank you very much. Kelsey, are you there? Hello? Are you there?
Sorry, I muted myself and I was still talking. I'm so sorry. Can you hear me? Hello, Dante, can you hear me? Can you hear me? Mm.
I can hear you. I can hear you.
Okay, I muted myself mistakenly and I was still talking loud and clear. So I said that I actually understand most of what you said, and I like the fact that you use analogies, especially in long term investing. And some people say like once it's after 6 months, it's long term. But yeah, yeah, you've come to debunk the the notion that after a year and a year that's good. And then the analogy is really, really works for me because I think I personally I love to learn with examples. And the term that is really new is dollar cost averaging strategy. And I feel like maybe if we listen again, because if I want to get you right, you said something about, you know, um okay, you used my coin, like you used my name as an example, so Kalsi coin. So I'm just trying to like understand it properly. So you said if I'm going to buy, let's say, um a certain amount or a certain number of the coin at a particular price, I watch out again for next month and see if the price goes up or whatever price it is, I buy again. And then I watch out again for another month. You used to mention $8, $12, and then at the end of it, I do an average of the total amount I have spent and total amount of coins I've bought, and then I should get my average. So that's going to give me a safe space between, the highest price that the coin was sold, or the highest price of the coin in the market, and then the lowest price. So did I get it right?
No, no, your voice was breaking, but for the part you said the total amount of the coin you bought, the total amount you spent on the coin over the total amount of coin you bought, yes, should give you the average. That's the average price. So you know if you actually bought at profit or you bought at loss.
Okay, so how do you know you bought at profit and how do you know you bought at loss?
When the what is it called, when the average price is above the highest price in the market, then you know that you did not catch the market young. That's basically it, because the idea of cost dollar average is to make the best out of the investment. But if you actually cost what is it called made what is this called, if you did the strategy right, you got the market right, you should be able to, you know, your average price should be reasonably low from the highest price of the market.
Okay, so that means you're trying to say that you would actually know whether you bought at a loss or at a profit after you've done all the calculations. Let's say in a period of like 2 to 3 let's say yes interval, like maybe weekly or maybe monthly, right?
Yes, when you are done investing
Um
the money, because you have to check the total amount you spent over the total number, just normal average, the total number of
yeah,
cryptocurrency you bought. So you can be able to know if you actually caught the market younger, okay, or
okay.
if you bought at the higher price. Yeah, exactly.
Mm. Oh wow. Actually I really had to like listen to that particular point, and I'm sure that other people will really find this interesting. And please, if you have any questions, do well to put it in the comment section. Reach out to us. Mr. Benji, please, what's your Twitter? What's your X username, please?
You said what?
Your X username, please.
Okay, you can reach me on X at benjistorm1, and on LinkedIn I'm at Odo Benjamin Uchenna. Just my name, and I think Facebook should be Benjamin Uchenna too.
Yeah, we've actually seen it on LinkedIn actually. So guys,
Okay.
want to say a big shout out to Mr. Benji. Please do also follow him on his LinkedIn profile. Omo, I'm using the word Omo as a Nigerian, can never leave him out. I saw what this guy is doing, and he's doing so much big stuff. Like he's doing really massive stuff. So please do well to follow him on social media platforms, LinkedIn and Twitter. Oh, sorry, X rather. Benjistorm on X, Benjistorm1 on X, and um Odo Benjamin Uchenna on LinkedIn. I actually just saw his post and I'm like, oh my god, this is good. So he's a blockchain educator. He's a Web3 community manager. He has worked with L Bank. Oh my god, he has done good stuff. So please, if you have any questions, if you want to, and I'm so sure that you actually like follow this session stepwisely because I did and I understand it right now. So now you know that these times are not hard. So when next somebody is talking about any of these long term versus short term tax, cryptocurrency and tax and cryptocurrency, you would just they walk in the park, right? So at this point this is 8:56 p.m. I'm actually trying to check if you have any questions on the YouTube channel. So you just give me let me just check if you have any questions. So, okay, while I'm checking for questions, Mr. Benji, what are your last words for us, for the listeners, newbies that are, yes, you said something very interesting. You need to know the amount of money. You need to have, like, let's say, money that is intended for investing. You don't just carry your house rent for your school fees. I'm so happy you said that thing because the stories were done here for this land. I just dey wonder. I'm like, what's going on here? So I'm so happy that you chipped that in. Like, I feel like it's a warning to anybody that wants to, play anyhow, so that you don't end up saying that this is a scam. So please, what advice or what your last words for newbies, existing traders, and basically everybody? And I'm sure people that have emotional problems with the market. You don't know.
I'm sorry, I think I was muted while I was speaking. So your voice was breaking, but if I got what you asked clearly, you were asking for a word of advice for the newbies and probably the experienced traders as well, right?
Yes, yes, maybe experienced traders and also people that have like so much emotions with the market and all.
Okay, okay. Now I'll start with the people who have so much emotions in the market. Now, the advice I want to give to you is not even a long one. What I want to say to you is this: whatever you see in the crypto market that is happening now is nothing compared to what has happened before. What you're experiencing now has happened before, and people stayed. Now, if you continue to stay, you will enjoy it. That's the truth. If you continue to stay, you will enjoy it. And it depends on how you stay. It depends on how you stay. So how you stay depends on if you enjoy it or if you get burnt out. If you are staying and all your mind is still focused on cash out, you might get burnt out on the way, because the crypto space is not a get rich quick scheme. So if you are too emotional about the market, I think it's high time you began to work on those emotions, right? You begin to work on those emotions. It's very important, because you cannot be a very emotional person and expect to make a lot of money in the crypto space. Your emotions will push you left, right, and center. Now, if you're a newbie in the crypto space, what I'll tell you is your advice is just calm down and learn. You see, learning, don't ever neglect it. You see, one thing that you see, the ignorance you can accommodate today is the pain you will bear tomorrow. Trust me. That ignorance is the loss you can bypass. The first I started out as a crypto trader was simply because I did not know how to break even. Breaking even simply means shifting your stop loss. So I entered that trade without a stop loss, and I totally did not know how to break even. So it was a problem, and for me to I wanted to leave the trade. Network was misbe I mean, we are Nigerians. It is possible. Network was misbehaving until I got liquidated. I almost ran mad. So the basic knowledge the basic things you think you can avoid I
So
have
Benji, you're
a master
breaking.
class going on currently, and one of my students was telling me about how he lost $50, and the illiterate 50 times 1,700. Calculate 50 times 1,700, you discover how much the guy has lost. So it is very important that some of these basic things in the crypto space you are trying to avoid, it can cost you a lot of money. So $50 times 1,700, discover how much this young man has lost simply because of network, because of the comment he used. Excuse me. Sorry about that. I needed to attend to something. So it is very important that you carry that you
You're breaking. You're breaking, please.
that you what is it called, you check these things. Don't you know why? There are people who stayed and their lives are better. There are people, I'm always make saying this, it depends on how you stay. It depends on how you stay. So there are people who have stayed here and they have made money. There's people who have also stayed and they have gone back to the village. So you have to stay right. So keep staying. Watch when you are burnt out, talk to somebody. Don't always look lock up, talk to somebody, try to go out when it is going wrong.
Oh my god.
Talk to people, go out with your friends. Don't allow motivational speakers on social media to ruin you. Okay, it is okay to lock yourself up. You don't know if it is for strength. God is so I think. Kelsey, are you there, please? Are you there? Our time is already
Yeah, yeah, yeah. You're actually breaking at some point. So yes, but I think the network was dragging you backwards, and I kept saying you were breaking. But I actually heard what you said. Yes, actually hit everything you said. So yes, thank you very much. This is 4 minutes past 9 with African time. And we want to say from the Valucop team, we want to say thank you for taking out time from your schedule to prepare your notes and giving us an epic session for real. Thank you. And to our audience who joined us, thank you. And those that watch, we appreciate you as well. Noel from Cascade, we also appreciate you for connecting us with Mr. Benjamin. We really appreciate. So tomorrow we'll be talking about security and
Can
scams
you
by
hear
God's
me? Can
special
you hear me,
grace.
Kelsey? I'm done
Yes, I
speaking. Oh,
can. Can you hear me? Hello, Benji. Can you hear me? I've lost my thinking of that. Hello. Oh my God, this network is. Hello, Benji. Can you hear me, please? Okay, please, if you can hear me, just type you can hear me, please, so we can end the session right now. We're done already. So I'll assume it's a network challenge on his end rather. So I would say thank you everybody for joining, and tomorrow we'll be talking about security and scams by God's special grace. So do well to tune in by 8 p.m. We'll be live on YouTube. So this is us saying thank you very much. Happy New Month, wishing you a beautiful November, and hope you smash those goals this time around. So that's us saying good night and stay good. Bye.